To effectively navigate the investment opportunities in 2025, it's crucial to begin by understanding the broader market environment. Let's explore some of the major factors at play. Firstly, let's consider the macroeconomic backdrop. Recent years have seen varying economic policies worldwide, aimed at managing pandemic impacts, supply chain disruptions, and energy crises. By 2025, we're witnessing markets seeking stability with potential moderate growth. Central banks have largely managed to steer economies back towards normalcy, though challenges like inflation remain pertinent. Interest rates, which have significantly influenced the market trends in the preceding years, are expected to find some stabilization, but remain a focal point for investors. Low-interest environments can spur borrowing and investment, while rate hikes might slow certain growth sectors. This balance will be critical for determining the returns on both equity and fixed-income investments. Simultaneously, inflation rates play a pivotal role in 2025. Although recent data suggests a tapering in the inflation surge of previous years, it's important to maintain a watchful eye on sectors susceptible to price shocks, like commodities and food. Positioning your portfolio to hedge effectively against inflation can enhance your investment's resilience in uncertain times. Geopolitical influences also weigh heavily on the market environment. With the shifting alliances and trade agreements, particularly in major economies like the US, China, and the European Union, investors must remain adaptable. Any geopolitical tensions or trade disputes could affect market access and supply chains, influencing stock market performance globally. Keeping abreast of these developments can help in making informed, strategic investment choices. In addition to these economic factors, technological advancements are shaping the investment landscape. The rapid pace of innovation in artificial intelligence, biotechnology, and sustainable technologies continues to disrupt traditional markets. Companies at the cutting edge of these technologies often present lucrative opportunities, but also carry inherent risks due to innovation's unpredictable nature. Governments worldwide are increasing their commitment to renewable energy and carbon-neutral initiatives to combat climate change. These efforts are creating new market opportunities while challenging traditional fossil fuel industries. Lastly, consumer behavior and demographics are pivotal in understanding market dynamics. The increasing influence of millennials and Gen Z, who prioritize sustainability and digital engagement, is pushing companies to innovate continuously. This demographic change is fostering growth in sectors like e-commerce, fintech, and green technologies. Understanding these market environments and trends is key to crafting a robust investment strategy in 2025. By interpreting economic indicators, monitoring geopolitical shifts, and leveraging technological advancements, investors can identify areas of opportunity and risk more accurately. Now that we have a clearer picture of the market environment, let's dive into one of the most enduring principles of investing: diversification. Diversification remains a cornerstone of a sound investment strategy, as it helps manage risks and maximize potential returns in an unpredictable market. At its core, diversification involves spreading your investments across various asset classes to reduce your exposure to any single risk. In 2025, this strategy is more relevant than ever, given the dynamic shifts in global markets and emerging opportunities. Let's start with equities. Equities still play a vital role in any diversified portfolio. However, instead of just focusing on domestic stocks, look for international opportunities as well. Emerging markets might offer attractive valuations, while developed markets may provide stability and steady growth. Consider sector diversification too. While tech stocks continue to thrive, adding healthcare, renewable energy, and consumer goods can provide balance and tap into new growth areas. Bonds are another key asset class. Even in a low-interest rate environment, they can offer stability and predictable returns. Explore both government and corporate bonds, including those from emerging markets that could offer higher yields. Municipal bonds might also appeal to those seeking tax advantages. As we navigate 2025, alternative investments offer an extra layer of diversification. Real estate remains a solid choice, with REITs providing exposure to the sector without the need to directly purchase properties. They can offer both income and appreciation potential. Further, consider commodities like precious metals and agricultural products, which can serve as hedges against inflation and economic uncertainty. The rising interest in cryptocurrencies and blockchain technology cannot be ignored. While these assets are volatile, they present significant upside potential. Allocating a small portion of your portfolio to cryptocurrencies like Bitcoin or Ethereum might capture some of this growth. Blockchain technology also offers indirect investment opportunities through stocks of companies engaged in its development. Then there's the consideration of index funds and ETFs. These provide a convenient and cost-effective way to achieve diversification across a wide range of asset classes and sectors, with lower expense ratios compared to actively managed funds. They also reflect the larger trends in the market while providing flexibility to investors looking to adjust their exposure quickly. Finally, do not forget about geographic diversification. With the global economy becoming more interconnected, political or economic changes in one region can have far-reaching impacts. Investing across various geographies can reduce the risk of localized disruptions affecting your entire portfolio. In summary, effective diversification involves carefully balancing risk and reward across a variety of asset classes, sectors, and geographies. By taking a diversified approach, you can better position yourself to weather market fluctuations and take advantage of growth opportunities in 2025 and beyond. As we continue exploring strategies for successful investing in 2025, one of the most transformative aspects of modern investing is leveraging technology and data analytics. In today's fast-paced financial landscape, technology not only enhances efficiency, but also provides investors with innovative tools to make more informed decisions. Let's start with robo-advisors, which have revolutionized how individuals manage their investments. These digital platforms use algorithms to offer financial advice or manage investment portfolios with minimal human intervention. By harnessing historical data and applying sophisticated algorithms, robo-advisors can help create a diversified portfolio tailored to individual risk preferences and investment goals. In 2025, expect robo-advisors to become even more advanced with the integration of artificial intelligence, enabling more personalized and adaptive portfolio strategies. Beyond robo-advisors, data analytics tools have become invaluable for investors. These tools process vast amounts of data to identify trends, correlations, and market sentiments that might not be immediately apparent through traditional analysis. Sophisticated data analytics platforms can help investors assess stock performance, economic indicators, and predictive analytics, giving them an edge in anticipating market movements and making data-driven decisions. Social sentiment analysis is another area where technology plays a critical role. By analyzing data from social media platforms, blogs, and forums, investors can gauge public sentiment towards specific investments or the market in general. This real-time sentiment analysis helps in identifying potential market shifts early and allows investors to adjust their strategies accordingly. Algorithmic trading, which uses computer programs to automate trading strategies at speeds and frequencies that are impossible for human traders, is also becoming mainstream. In 2025, we'll see increased adoption of algorithmic strategies among retail investors, not just institutional ones. These algorithms can execute trades based on defined criteria such as timing, price, or quantity, significantly reducing the emotional bias that often compromises investment decisions. Furthermore, blockchain technology continues to impact financial services by enhancing transparency, reducing fraud, and improving the efficiency of transactions. Blockchain offers the potential for real-time settlement of trades, reducing the counterparty risk and operational inefficiencies involved in traditional trade settlements. Investors can also explore blockchain-based financial products as part of a broader strategy. In summary, ethical and sustainable investing is about aligning your portfolio with values that matter to you and the world. By integrating ESG factors into your investment strategy, you not only contribute to global sustainability efforts, but also set the stage for potentially rewarding financial returns in 2025 and beyond. And there you have it, the greatest investing tips for 2025. Remember, while these tips are based on current trends and expert predictions, every investment comes with its own risk. It's important to do your homework and consider consulting with a financial advisor. If you found this video helpful, give it a thumbs up, subscribe for more content, and let me know in the comments what your top investment strategy is for 2025.